What's going on, everybody out there in the land? What's going on, everybody? Not now. Okay, I think we're back on. I think we're good to go. All right. So 10 kilo for the people. I'm going to be on live for a little while. So for the people out there that want to call in and chime in, you can call in and chime in on this. But the reason why I'm talking about the 10 kilo, I had a little technical difficulty there trying something new. But the reason why, and I hope you guys can hear me because I'm trying something a little different today. So, but anyway, 10 kilo. 10 kilo is the annual report that you get from financial companies, right? It's the annual report that goes to the SEC. You know, SEC is the Security Exchange Commission. They're the ones that govern publicly traded companies. They're the ones that send people to jail for insider trading, all of the good stuff like that. And the thing about what's so important about the 10 kilo is that it's very dry. It's dry like sawdust, but I love to see, not that I love to see people use it, I don't see people use it at all. For prime example, people hit me up all the time. Hey, I'm looking to invest into this company, or I'm looking to do this with XYZ, or whatever the case may be. And that's not a good idea because you're not even looking at the finances of the company. People don't even look at the finances of a particular company. And when you don't look at the finances of a company, how can you make an investment or even talk about making an investment? For prime example, if one of your aunties, cousins, or uncles or whatnot called and asked you for some money or an investment or whatever was going on, and the reason why you are calling and they're calling and asking you for money or whatnot, you know your cousins, aunties, and uncles better than anybody. If you knew they didn't have a job, if you knew they was up to their eyeballs in credit card debt, if you knew they had a history of not paying people back, if they had all these issues, oh, what's going on at Tucker, Abdullah? If I'm saying that right, what's going on, Trucker? What's going on? Well, that's some people in the live chat. But the thing about it is, you would say, man, I'm not going to lend this person money because, or I'm not going to invest with them because they have a bad track record. The thing about it in the investing world, I see people all the time making investment decisions based off of what they heard, what their friends said, what their cousin said, without looking at the 10 kilo. How many 10 kilos have you evaluated? That's why I wanted to bring this up. The 10 kilo is publicly open to everybody, which is 10K. Some people call it 10K. Some people call it 10 kilo. Some people call it the annual report. These are reports that are turned into the SEC. The stuff that you're seeing on ETrade, TD Ameritrade, Robinhood, those are press releases. Or those are press releases that come from the 10 kilo. So they go to the 10 kilo, pull out information, and then they send it to, they publish it or whatever. They interpret it, they make it more appealing to the open eye. But the 10 kilo, you could go in there and see how much money the company is making, how much money the company is losing, all the issues and problems, if they purchased this stock back, if they've done anything, right? So you have all these at your fingertips. And the thing about it is, I find it so discouraging is, I guarantee you about 80 to 90% of the people that you know in the investing world has probably never even pulled up a 10 kilo or have even read a 10 kilo. For a prime example, I saw they were doing a 10-year anniversary and they was asking Warren Buffett, the legendary godfather investing, about on Wall Street Journal. You can look it up. It was asking him about the 2008 crash and how he didn't bail out some particular companies. And he didn't bail out Lehman Brothers. He didn't bail out AIG. A couple companies called him to ask him to help with cash to bail him out off of Wall Street. And he was kind of telling his story about, why he didn't bail out companies and whatever the case may be. And as he was standing there in the interview, he pulled out the 10 kilo of, I think it was Lehman Brothers or AIG. He pulled out this 200-page 10 kilo that he had read and he was going through, circling and highlighting and writing on it and stuff like that to see if he wanted to make an investment to the company. And the thing about it was, he turned them all down for obvious reasons. But it was the point that I picked up out of there was, how many investors or how many of you guys have a portfolio that you even read the 10 kilo? You have companies that people are investing in that don't even make money. They haven't made money in years. They haven't netted a profit in years. But people are investing into them. People don't even know what's going on with the company. All they know is press releases. All they know is, man, I heard that Under Armour just signed this person. This company is about to make some money. You don't know a company's growth. You don't know that behind the scenes that Under Armour went and borrowed $50 million from JP Morgan just to be able to pay that athlete, or just to be able to pay the NFL, or just to be able to pay for whatever deal that they constructed, and they actually haven't made any money. So why are you giving the company particular money? But it was something that I heard Warren say, was that you need to first read the 10 kilo, make up a price in your head. Once you have that price, then you look at the actual price of the stock. Most of the investors out there, I want to tell you guys, I want you guys to become more seasoned and better investors and I've challenged myself. Now, go through the 10 kilo. Read what the company is putting out to the SEC. The reason why it's so important is the SEC is the governing body over the SEC is the governing body over publicly traded companies. Meaning those are the ones that send you to jail. Excuse me about that. But they're salt, they're dry, they're old. For prime example, let's take a look at one. Let's see some of the information. I have one on my desk here that I was looking at. I'm actually looking at Nike's 10 kilo, right? You can Google this. You can just Google Nike 10K report. Now, I'm not talking about running a 10K or nothing like that. We're just talking about a Nike 10K report. Inside of this, you're going to have sales and marketing, significant customers, product research, risk factors, unresolved staff comments, legal proceedings, right? Mine safety disclosure, selected financial data. How many stocks did they buy back? The reason why it's so important about how much when a company buys back stock is most companies buy back stock because they believe that the stock is cheap, So if a company is buying back stock, they believe that could be an inside trace to you, particularly maybe want to buy some stock or whatever, right? So those are the things that we're looking at. Let's look at some of and you can just go through here and click through. And it's, like I said, it's dry. Sales and marketing. A lot of it doesn't change from year to year. Not a lot, but some of the things kind of stay the same, but you can tell. Like right here, Nike brand factory stores, they have 196. Nike brand in-store sales, including employee-only stores, 34. They got the Hurley stores, including factories and employees, so 362. Then they go into the international market. Nike brand factory stores internationally, 558. Nike brand in-store overseas, 72. This is information that they are turning in. Manufacturing, they're talking about in here. Trademarks and patent. We utilize trademarks in nearly all of our products. Employees, they approximately have 70,000 employees. The executive offices, they're having an annual meeting coming up on the 3rd. All these particular things that you have. Risk factors. Let's go down here and look at legal proceedings. I'm going through 10 kilo of Nike right now. Where is it at? Let's go to legal proceedings. Okay, for prime example. Okay, legal proceedings. Okay, there are no material pending legal proceedings other than the original litigation incident to our business to which each part of our property is the subject. Okay, so we have no legal proceedings at this time. This is where you can find out companies are in legal problems. They could be going through bankruptcy. They could be going through all type of money problems, all the other great stuff. So that's good information. So let's go down here some more. It's kind of okay. Equity related stock matters, issues, and equity. So it has outperformed the S&P 500 since 2011, right? Nike has outperformed the S&P 500, the Dow Jones, and they outperformed the S&P 500 apparel, accessories, and luxury goods index. So they're putting that in their performance graph. Now, selected financial data. As of the end of May 31st, this is 2016, right? Because they put this out in 2017. They have their revenues in here, their gross profits, their gross margin, net income, continuing operations, how much money they spend on continuing operation. They have in here the basic, the diluted earnings per share, cash dividends per share, how much dividends they done paid, cash flow, the common stock price range went from $68 to $47. They tell you how much short-term investments they have, the inventory, working capital, total assets, capital to leases, shareholders' equity, all this information that's in here that the average investor does not know or even care to know. So this is information you should be knowing instead of writing and just saying, "Oh, wow, look at the media." The media says that Nike just signed Jordan and Jordan just signed somebody else. River Mason, what's going on? He says, "Much respect to you, River Mason." But yes, the phone lines are open if you want to call in and talk about it as well. 563-999-1980. But the thing about it is, this is all the information you should be going into and looking before you are out here making an investment into a company. You shouldn't be DMing me, asking me, "Hey, Prince, what do you think about this company?" It's all out there. If it's a publicly traded company, it's out there. You wouldn't lend your cousin, friend, or buddy money if you will first evaluate their financial picture. You're going to say, "Whoa, they don't even have a job. Two, they still owe me money. I've heard they don't pay people back. So no, I'm not going to lend them money." That's what you would do, right? So why aren't you doing this with your investments? In your portfolio, you might have companies in there going through legal proceedings, probably about to get sued to the eyeballs. Don't even know them. That's the 10 kilo. Now, also on that, you have the 10 Quebec. I think they call it 10 Quebec. It's 10Q. The 10Q or the 10 Quebec is every quarter. Dry report that comes out every quarter that they turn into the SEC. The 10 kilo is the annual report, right? You have access to all of those. Peel that thing open, see how much money that. Use it like it's a house. If it's big words that you don't understand, Google, look them up. You can ask somebody. If you ask me, "Hey, Prince, what is the diluted shares? What is this company? They have Brandon L. He's saying never thought about that." Yes, people are like, "Oh yeah, I saw a Google message or I saw a press release, and it says Amazon is about to do XYZ. So guess what? I brought some shares in Amazon, and Amazon stock went up. So I'm a genius." Just like the video I put out, everybody is a genius in a bull market. When the market is doing well, you buy stock, it's going up, it feels like you can't miss. You're a genius, I'm a genius. Everybody feels like a genius. But it's when a company is experiencing a downtime, that's how you're going to figure it out, right? That's when you're going to figure it out. You're like, "Man, Under Armour is doing all of these moves, or Nike is doing all of these moves." You don't know that they borrowed or they got $100 million loan from Goldman Sachs to be able to make all these moves, and they're not even making any money. So guess what you go and do? Untrained investors, you just go and invest your money just because you saw them open up a store here, you saw them collaborate with this person, you saw them do this, and that's all optical illusions, right? You need to get that dry sandpaper. And I saw that and I was so moved by seeing Warren do that, where he had that 200-page 10 kilo, where he was just going through, okay, nope, looking at a company, evaluating a company. Guys, give me 1 second. Hello? 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 Yes. Hey, how's it going? What? Wow. Okay, I'll let Mac know, and I guess I. Oh, he is. Well, why is this so late? Oh, okay, got it. All right. Thank you. Appreciate it. All right. Okay. Bye. Hmm. Okay. Got it. Thank you. All right. All right. Bye. That's ghetto as heck. I don't know, right? Sitting here and answer the phone on my live. But I got stuff I gotta take care of too, right? Just got some good news. But now I want to get into, I might do another live about the LEI. The LEI. Anybody that's listening right now, who knows what the LEI is? Anybody know what the LEI is? Leading economical indicators. Look at Tucker. He's laughing. Leading economical indicators. Leading economical indicators. These are reports that are put out by the conference board every year. Leading economic indicators are indicators that tells where the economy is heading before it gets there. They put this out every month. The next one is September 20th. If you don't know what this is, please look on the YouTube channel. I can tell you how to get this report. It comes from the conference board. And for prime example, before things happen, before the leading indicators tell where the economy is going before it gets there. For prime example, it watches things like unemployment rate. Before you find out people don't have jobs, people that don't have jobs usually file for unemployment. So they monitor how many people are filing for unemployment. Because when people start filing for unemployment, that means that their money is probably going to get tight. They're probably going to stop spending as much, which could be an economic indicator of the economy coming down in the future. Another thing is outside the leading economical indicators, you have building permits. So you take something like building permits, right? And when you meet building permits are things that building permits, before someone is able to build, they must file for a building permit. So if building permits are not being filed, that means what? People are probably not building. So by monitoring building permits, you can tell how much a person is, how much real estate is going to go. So if you see an increase in building permits, that means that people are planning on building. If people are planning on building, that's a good economic indicator of things looking bright for the future. If people stop using if people stop, if you see a decrease in building permits, then that lets you know the economic indicators that the economy could be going down. Another one is like manufacturing hours. They monitor people who work in factories, their hours. So when you see people in manufacturing get less hours, or when the hours start to drop in manufacturing work, guess what that means? Productivity is slowing down. It's like me. Take me. I'm an author, right? I'm doing well. I'm ordering books left and right. Books are being ordered left and right. And guess what? That means that the people in the factory who's making my books to ship out to the world, they are having long hours. If my job, let's say if my sales go through the roof, they have to work even longer hours. That means manufacturing people work longer hours. So when they see manufacturing people work longer hours, that's an indicator of the economy is going, productive, because nobody's just sitting on the clock for more hours. The more hours that people are working in the manufacturing arena shows that they're making product to be sold for somewhere else. So when those hours start to decrease, that could be a indication of things slowing down, right? My books are not really selling. They're kind of stagnant, or they're decreasing, or making no sales. Now, since nobody's ordering, it doesn't mean why somebody's going to stay on all day. I mean, work that many hours. So those are some kind of little things. Building permits, manufacturing hours, unemployment, things, inventory. When a company boosts up its inventory, that means they're planning on selling, right? Walmart, if they sell out of milk and they decide to boost, their milk or whatnot, when they put in a big order for milk, if they're boosting their inventory, that means that they're planning on selling a lot. When Christmas season comes, all the retailers are going to stock up because they're planning on the demand and meet it. So by looking at what somebody has on inventory is a great indicator of a leading indicator of what economy may be going. Tucker, whoa, yeah, of course, I'm giving it to you, right? So this is public information that's put out every month that tells you what the economy is going or where it's going before it gets there, things like that. So it monitors manufacturers' hours. It monitors building permits. It monitors unemployment. What else? Something that it monitors. I did a whole episode on this called Leading Indicators, and it's more things that These are indicators that happen before they come out. So September 20th is the next one. I love to sit back and watch those indicators because I can see what indicators are happening before the market reacts to it. That's how I knew that from the last time. The last one was in July that I read, and it was up slightly by zero point 0.5. And as you can see, we've been in a bull market since. So I love to look into the leading economic indicators to tell where things are coming from or where things could possibly be headed. Those are leading economical indicators. Other leading economical indicators could be, well, interest. Yeah, interest rates are another one. S&P 500. They watch the S&P 500. They watch interest rates because right now we live in a very low interest rate society, right? Very low interest rate society. Uh, and by living in a low interest rate society, it makes money easy to borrow. So while everybody's investing, my thing I'm worried about is what happens when this money is not easy to borrow, right? When the money is not flowing around as easily, that's when you're going to see who's going to be struggling, who's going to have a hard time. I'm sitting here looking at these bag of Doritos that's probably a year old or something to get off my desk. But so those are the things that you have to think about when you're looking at leading economical indicators. I love to monitor it. It's coming out next month. And those are things I love to keep my eyes on of knowing when the economy is going. You have these things right at your fingertips. Now, it's not open to the public, you know, it's not open to the public, to people. It's not open to the public to people because they are you know, I mean, it is open to the public, but it's not as easy to get. You got to kind of look for it. You got to have a subscription, which is free. It's just called going to conferenceboard.com and signing up, and they have all type of indicators that are there. So those are great things you need to look into to become a more seasoned investor, understand the economy, understand what's going on, right? Because when a company decreases its inventory, that means that it's probably not planning on those products to move. And if a company is saying, hey, you know what, we usually order 250 bottles of water, but they really didn't sell that well last year. So this year, yes, this is live. Somebody asked me, is this live? Yes, this is live. So it's Jay Fox. So at least what I was told. But so with that, if a company next time it comes around, it only orders 220 bottles or 200 bottles instead of 250, that could, if I see that order come in, I say, wow, last year they ordered 250. Why are they only ordering 200 now? That's an indication to me that the company is not expecting those bottles to move. Why did they decrease their order? So when a company decreases its inventory or slowly backs off its inventory, it means it's planning for those products not to move. And when those products don't move, that's when you have some, those could be a sign in the economy that, because people just don't stop buying stuff overnight. Something happens. They lose their job first. Now they don't have a job. When they don't have a job, they start to, And now that I don't have a job, next month, I'm not going to go to the movies as much. I'm not going to eat as much. And when that person, now they don't have a job or the job is not secure, or it's something called consumer confidence. If I'm not confident in having me a job, I'm not going to buy a house next year. If I'm not confident in my job, I'm not going to buy that car next year. So they also measure consumer confidence because when people are not confident, when people are not when people are not confident in their job, if I don't know my job and lay me off tomorrow or call me off tomorrow or anything like that, then, then I'm not going to go out here and buy a house or buy a car. If I'm like, man, it's just a little part-time thing. Another one, what else we talked about? Manufacturing jobs, Dow Jones, yeah. Stock market prices, yeah. Stock market is usually ahead of itself. The stock market is a good indicator here. What else? Oh yeah, I don't want to get into lagging and things like that. For the It said, okay, I have a question. Is there a watchdog for gamekeeper so they won't steal money? What do you mean by that, Jay Fox? Are you speaking in the context of people that are who's out, on Wall Street stealing money? But the thing about it is, anywhere you point me to $1,000, I can point you probably to a crook. You can go anywhere and put $1,000 on the ground, and you're going to have somebody that's going to try to steal it. You're going to have somebody that's going to try to manipulate it. In the New York Stock Exchange, the governing body is the SEC, the Security Exchange Commission. This is why they must return in reports every quarter and annually. And anytime they make all these changes, they must report it, right? They can't go out and say buy my stock and whatever the case may be. They have all type of rules and regulations because, of course, that's written in blood, meaning somebody tried to steal money. The broker gamekeeper, SEC, and FINRA. FINRA was the ones that make the laws. Like by me passing my Series 65 and Series 63, FINRA, I can't even think of the Federal Financial Industry, something Regulation Association, whatnot. Those are the ones that are the governing body over what we have going on. And the reason why we had that in place, the reason, say someone decided to cook their books, they could easily lie. They could lie or whatever the case may be. If they turn in a lie, if they lie on their 10 kilo or if they lie on a 10 Quebec, their quarter report or their annual reports, you have to, thumbs up. Yeah, give us some thumbs up or whatnot. I see somebody putting in here, Tucker, put thumbs up. But when you have a governing body that looks over, if you lie to the SEC, you can go to jail. These are the people that lock up the people like the Wolf of Wall Street, the Bernie Madoffs, things like that or whatnot. It's the SEC. So when you lie to them, because that is seen as defrauding the government, not the government, but the public people, you're completely lying. So if a company lies on a 10 kilo, when they turn into the SEC find out they lied, they can go to jail, right? So white collar crimes, because they know that you put that out to the public can Now, if you go read a press release from CNBC and you made an investment, that's what it is. Usually, most of the times, CNBC are going to the 10 kilo or they're going to the 10 Quebec, summarizing what they see and putting that out there to you guys. And the average common investor is watching that. And when they watch that, they're making investments off of that, right? So you have to be smart. You have the access to look up the 10 kilo on Amazon, Google, Netflix, Facebook. It's dry as sawdust, or whatever you want to call it. Think of something dry. And that's what it's about, right? But, to become a professional investor, those are things you must look into, right? Those are things you need to look into to become more as a seasoned investor. And that's something that I challenge myself to do. I wanted to look inside of a company and see what that company is worth, see what that company financial problems are, see what things are coming up. Are they buying back their stock? Are people being fired? Are they under legal situations? Okay, Tucker says, I know you talked about 10 kilos. Let's see here. I know you talked about 10 kilos, but what's your opinion of solid blockchain technology companies? I told people that from the beginning. I love blockchain. I purchased 2 of the blockchains ETFs right when they came out. I can't remember their names now, but I did a video on them, and I think it was called How to Invest in the Blockchain Technology with ETrade. But those, I believe in. I'm a bigger fan of blockchain technology than I am of the cryptocurrencies. The cryptocurrencies right now, I watch them closely. I see what Bitcoin is doing, how it's going up and down or whatever. Who knows? Bitcoin could run up to $100,000 by the end of this show. Who knows? So I'm not the biggest fan of it, or whatnot. All the seasoned investors that I talk to, I'm not here to try to get rich and get rich fast. I mean, so I've been down that path of making a lot of dumb decisions and things that, like, man, if I would have just done this, because I learned it's not about the investments you do make, It's about the investments that you don't make. Look at Warren Buffett. He had the opportunity to be able to bail out AIG, Lehman Brothers. I think it was Fannie Mae, the other one. These big, huge, multi-billion-dollar companies that he could have easily bailed out. And he looked at their finances and said, no, we're not in a position to be able to do that. And he didn't do it, right? Now, granted, those Lehman Brothers just went away. AIG, I think the government took over them, but maybe it could have turned into a great investment, but he didn't make that investment, So I know you just talked about it. So yeah, so I definitely believe in solid blockchain technology company. The technology behind cryptocurrency, I'm there. But all these, guys, I keep telling people this every time. My inbox is flooded with different cryptocurrency companies. Oh, we're cryptocurrency. Oh, we are this or we are that. Would you mind interviewing our CEO, or would you mind talking about our company, helping us get people to buy our coin? We'll pay you in these type of coins. And no, I've never been interested. I'm like, well, if he can create one, I can create one. The people that's in this chat right now, can get together and create one and launch one tomorrow. How in the heck I'm supposed to navigate through this? There's over 1,000 and some cryptocurrencies out there. The only way I can see myself investing any type of penny into that is through that. It's like an ETF. The two twin brothers tried to put an ETF. The SEC denied it, but it's one out there called GBTCB or whatever. That's the only way I can see myself. How am I supposed to pick the right one? Is it Bitcoin? Is it Ethereum? Is it this one? Is it the other 500 that I haven't heard of? How am I supposed to pick one? The big wallet, the this to that, while the stock market is at its all-time high? My portfolio is not looking bad right now. And since we're going to talk Canada, I'm going to get some more questions here. If you guys want to call in, the number is 563-999-1980 to come on live. Okay, let's see what we got here. What's the next question? So Brandon says, I don't know if this is a change in subject because I just got here, but is MGTI stock a good stock to invest in at the moment? I brought it at 60 cents and it dropped to 40 cents. Should I just wait it out? First question I'm going to ask you, Brandon. First of all, what type of company is that? It sounds like it could be some marijuana penny stock company. Have you looked at the 10 kilo? Have you looked at the 10 Quebec? How much money does this company make? What is his plans for the next quarter? Since you already made an investment, oh yeah, jumped in 60 cents. Of course, if it goes up to $5, I make this much money. Of course, right? But most people that make the most money off of penny stocks are the people that short them. They bet against those penny stocks, right? So I'm going to challenge you that, Brandon. You asking me if it's a good stock to invest in at the moment. I want to ask if you've even done any research. What do you know about this company? You gave them your 40 cents. You purchased the shares. You lend them your money. I know you just ain't lend anybody your money, right? That's the way I want you guys to think. When you're purchasing a stock, you're loaning somebody your money. You just wouldn't loan anybody your money, right? Would you just loan anybody if I say, hey guys, hey, let me just borrow $10,000? You're like, first thing you're gonna ask me for what? Why? What are you gonna do with it? How are you gonna pay me back? Is this an investment? What you gonna invest it in? Now you're gonna give me the third degree, right? But you won't give these other companies that you're buying stock in a third degree. I guarantee you 9 times out of 10, you probably read a press release or your friends at work told you, or you knew somebody that made some money off of it. So you just turned around and said, hey, look at me. I want to be able to buy the stock, right? Come on, do your homework. I want you guys to become more seasoned. And the reason I'm talking like this, because I've done the same dumb things because I didn't have nobody to talk to me like this. I know what a 10 kilo was. I just read news reports and I heard something and I went on a website and said, ooh, look, ooh, wow, it says this. But I didn't get down to the raw facts. And I always wonder, how does Warren Buffett evaluate a company? How do you know the stocks evaluate? He's not going on ETrade.com and looking at press releases. He's pulling out them 10 kilos. He's putting out them 10 kilos that looks like this. I may put that interview up here so you guys can see it. Things look like this. When you print it all out, thing look like this. And he goes through it, reads through it, get through the finances. Oh, they're bringing in this much money. They're not bringing in that much money. They're having these problems. They've loaned out this much money. Their debt to income ratio, the price to income ratio, the uh, price to earnings ratio, the all of these things, right? What good is it if I told you guys, man, I make $150,000 a year, but I spend 200,000? Would you loan me your money, or would you say I had some issues? So that's what people do all the time. They always sit back. They don't even know anything about a company. Heard about it, saw some good thing, or use this. This how it go. You're sitting there, you looking back at a company, and you saw something through a press release. It was 40 cents. You saw it for 40 cents. You didn't pay much attention to it. Who is this? Gerald. Gerald said, "Hey, I have a question with how much should star the day?" I don't get what you're saying there, Gerald. Hey, I have a question with how much I should star the day. How much you should start investing? How much you should start? Can you clarify that for me, please? But 9 times out of 10, people will hear about a company. Oh, look at this marijuana company. Usually they hear about a big run up. Oh, look at these companies ran up, you know, 50%, 50 in the last week. Whoa, 50%. Now it's 60%. And it's going to go higher. So you're like, okay, well, let me watch this. So you watch it at 60 cents. Man, you blink your eyes. Now it's 65. Now it's 70. Now it's 80. You're like, man, I could have got in. This thing is going to be this. And next thing you know, you start watching it. Next thing you know, you're like, well, it's only 80 cents. So I guess I got 100, 200, 300, 400, $500, and you go invest in it. Then it goes down to 40 cents. Then you watch it go down and down. You're like, should I buy this? Because if it went to $1, $2, you'd have thought you was a genius. But since it's going down, you're like, what did I buy? Is this a good company? Should I just take a loss? Should I do that? Emotions, being smart, didn't look at the paperwork, didn't look at the 10 kilo, just read the quick little summary of the company and saw how it was moving, and you just jumped in. That's not investing, right? Okay, so Jerry writes back, he says, yes, investing for not being Pacific. I'm guessing you're saying how much money you should start investing with, right? If this is the thing about investing, if I was starting investing, figure out a comfortable amount that you can do every single month. Investing is not a one-time thing. It's not, hey, you know what? I got $500. Let me just find something to invest in, throw it there, and forget about it. You should invest into a company every day. It should be like watching grass grow, right? When you watch grass grow, what do? You put it in the ground, you fertilize it, you water it, you wait till it grows, you water it some more, you let it grow some more, you water it some more, all those things like that. That's what you do to watch your investment grow. You do it over and over and over. You just don't throw something in the ground and just, oh, I'm gonna see if these seeds grow into grass. Nothing grows. Well, it is what it is. Because the thing about it is, what is the number one enemy of your investments? What's the whole purpose of investing? I know it's to make money, but why do we have to invest? Why does every American have to invest? Whether it's a 401k, a 201k, or whatever the case may be, why is it that we have to invest? Ask yourself that question. That's something I want you guys to ask yourself. Do you ever trade calendars? Are you speaking about the stock strategy using the calendar? Is that what you're talking about, J Fox? So the whole reason why we invest is inflation. Options, yes, of course. As of lately, I haven't been very big in options. I only catch options every now and then. I used to be like a crack fiend when it came to options. I used to be on top of options because you make a lot of money very fast. So I used to be on top of it all the time. But I usually, buy calls or put, or I may do a straddle or maybe a vertical spread. But in options, who make the most money in options, J Fox? The buyer or the seller? Who makes the most money? Who has a 90% some chance of winning in options over time? Exactly, Jay. So the seller, people who sell options, people who own a stock and want to make more money, who sell their stock, are the ones who make the money over time. So, okay, Stephanie says, got a question about dividend investing in particular. Looking at a long-term strategy here, how much should one start and close at before it gets into the too much eggs in one basket category? Now, Stefan. Okay, that's what it says, Stefan. So, Stefan, for anybody that want to call in, 563-999-1980 with one company. Okay, so I'm guessing that you find a dividend paying company like a Verizon or Apple that has a strong history of paying dividends and that continue to go up, or Ford, and you keep buying it over and over and over and over and over. And you're saying, hey, at what point can I get so I become more diversified? That need to be more diversified. Rule number one, if you are a dividend investors, right, I will spread out my dividend investment strategy over different industries. Meaning, I just want to put all my money into AT&T and Verizon because they pay high dividends. Because guess what? AT&T and Verizon are what? What are they both in? They're both into the telecommunications industry, right? If something happens with that, say if 2-3 years down the line, we ain't even using phones no more. We're using, we're using birds or whatever the case may be, and the telecommunication industry takes a big hit, just like the retail industry. That would be like I wouldn't buy Macy's and JCPenney's and Nordstrom's because they pay high dividends. Because guess what? Nordstrom's, JCPenney, Nordstrom's, and Macy's are all eating a bullet right now because this thing called the internet and Amazon, right? So I would spread it out through different industries. If dividend investing was my strategy, I would get Ford, which is an automotive that has a long history of a good, strong blue chip company. It has to be a blue chip. How much money? What is the market capitalization of a large blue chip company? How much money in market capitalization must a company have to be considered blue chip? I want to see who knows that. But I would do that. I would get me a large cap blue chip company, right? Once you are a large cap blue chip company, I would turn around and I would invest into different industries. For prime example, Ford, General Motors, Tesla. Tesla don't pay dividends. Ford, General Motors, boom. That's automotive. Then telecommunications, AT&T, boom. Then Apple or Microsoft in the computer field, boom. Then you can go into I'm trying to think of another field, maybe the internet. Well, not most of the internet. Amazon doesn't pay, Google doesn't pay. You may want to get into the shoes and apparel, like a Nike or a any other company like that. Hey, Nike, they're a big, large company. I would go with large cap companies. It's a company that has $10 billion in market capitalization or more. The reason why I would choose large cap, because guess what? The richer you are, the less likely you are to go broke, right? Disney. Disney, DIS, that J Vox said. So these are companies that pay nice dividends that are spread out over different industries. I would invest into them, allocated in a way that I felt comfortable, and also depends on your risk level. If you're not that risky of a person, you may want to come back down and go with bonds, treasury bonds, right? Or you can get bonds, ETF bonds that pay 2 to 3% a year. You have ETF bonds out there that you can grab that are paying 3%, right? They're not going to go crazy and go up, but you got to think about it. Companies that pay heavy dividends don't grow that fast. So I would spread it out over different industries and not, for prime example, I'd be like Nike. For Apple's $1 trillion company now. I would go with all large cap companies in different industries that have a history of growing dividends, have a history of paying dividends that's continuously go up, right? And there's all type of ways you can look at that type of stuff. So I would build my dividend plan around that if I was, big into dividends. But that's a very conservative way of investing. That's someone who's trying to preserve their capital, someone who has made a substantial amount of money and they're not really trying to take that much risk, or they're in the age of they're retiring and put money back in. So hope that helps out Stefan. So Stefan, he says, understand and thank you. Oil industry is a good industry too, just that they have to be aware, as we should too, with the threat of renewable energy. Yes, I'm not a big fan of oil at all. My big thing is because everything that comes, I've said this over the years, everything that comes out in the world, everybody is figuring out how to do something with less oil. Every car is trying to use less gas. Every product is trying to use less and less oil. So if every company is trying to get away from its dependence away from oil, why do I want to invest into that for the future? That would be like, hey guys, every company is trying to get rid of cell phones. Why do I want to invest in a cell phone? That'd be like investing in the pagers. You know, remember back in the day, everybody had a little beeper or a pager. That was a cool thing to have, or a two-way phone, or an iPod. And guess what? iPods don't exist no more because something, is built into your phone now. So I wouldn't be investing in the iPods if I see in the future everybody's trying to get away from it. Every piece of machinery is trying to use less and less oil. Every new piece of machinery is using less and less oil, right? Will we still be relied upon it? I'm pretty sure, but somebody's going to figure out one day how to use water to move cars. If you take water and salt and oil and fire, you know, but we have the petrodollar. I don't know what that is. Petro. Am I reading that right, Tucker? So that's something I haven't been too crazy on. I'm like, man, everybody's trying to get rid of this. I need to get out of it. Especially when you have to compare. Why would I take that much risk on oil when I have something out there like Google, Amazon, S&P 500 index, the Dow Jones index? Hold on. Okay, we got a caller coming in. 1 second. The Dow Jones index. You want to invest the show? What's going on?
Mine, how you doing, Mine? Is Prince Talk?
It's Prince Talk. How's it going?
Mine, I like your show, Mine. You've been doing real good, Mine. I like it, Mine.
What's your name? Where you calling from?
I'm calling from Georgia. I'm in Atlanta right now. From
Georgia, Atlanta? Okay, cool. What do you want to, what's on your mind?
I'm in Atlanta right now, Mine. Mine, I'm just watching your stream. It's been real good, Mine. It's you just like usual. You've been doing good, Mine. It's real enjoyable, Mine, because yeah, Mine.
Okay.
So yeah.
Great. Thank you for calling in. All right. Thanks to let me call for calling in, right? Sunco and Transfer Energy a good buy? Oh, petroleum. Oh, okay. But we have petroleum now. Okay, I see what you're saying now, Tucker. Sunco Transfer Energy, I'm not sure. I haven't looked into that company or whatnot. I really kind of I was very big on oil coming in 2008 when gas prices went through the roof and oil was over $100 some a barrel. Gas prices was going crazy. How to research REITs for investing? Hopefully here on the next month, I'm supposed to be having Bob Thomas from the real estate. He is the chief editor of Forbes Real Estate Investment Trust. 25 years in real estate investment trust, almost $1 billion in REITs. He's probably come on the show later this month, but we all know how that go. I don't like to talk about future guests, but he's going to be talking about REIT investing and stuff like that. Very big expert in the industry. I love to have him on. He said he's going to come on, but we'll see if he comes on here. But if you want to research REITs, you have REITs investing right there inside of You have REITs investing, right there in TD Ameritrade, ETrade, all that great stuff. So you definitely have REIT investing on real estate investment trusts. I think I've done an episode on it, but I'm pretty sure I have some videos at Adrian Walker to ask that question. Check out some of the videos I have here where I've done some videos and research how to do REITs. All right, and hopefully we get Bob Thomas on. I really love to have him on. Is Sunco and Transfer Energy a good to buy? Like, I don't know about them. I have to look more into them. I don't know about the top of my head. I just know, generally speaking, into the oil industry, I'm not very, very, crazy about that industry for the simple reason of if people are talking about getting away from it and we're cutting out reliabilities from it and we're trying to do all this, renewable energy has been getting up, so I don't think about it. The broker I prefer to use, I don't want to give anybody any shout outs or anything like that. But I have TD Ameritrade, I have ETrade, and I have Robinhood. The one I kind of see myself leaning on the most, or it's between a mix between ETrade and TD Ameritrade, right? I mean TD Ameritrade and ETrade. I mean they're both by the same stock, but I like the research tools of both. So those are the two that I like. But Robinhood has no fees, so that's a good one too. Stefan says, personally, I believe the oil industry. Hold on, we got one caller coming in. Oh, okay. All right. Take that back. Yeah. We personally, I believe the oil industry will be here to stay, but the companies have to invest in renewable energy too. I understand the concerns with the industry, however. I believe they're here to stay too. Let's think about it. Hold on one second. Okay. Um, let's take Microsoft for example, right? Microsoft, for example, has when you look at it, you have Microsoft, for example, not Microsoft. I keep saying Microsoft. You're losing my MySpace. Is MySpace still here? One second here. We got a caller. What's your name? Where you calling from? All right. I guess somebody got scared. But anyway, yes, like MySpace is still here, right? MySpace is still here. MySpace is still here as far as what it does, but yeah, these oil companies will still be here, but what are they doing to innovate themselves? What is being innovated, right? So, but yeah, that would be cool if they evolve, if they do what, let's take what companies evolve, like Coca-Cola. Remember Coca-Cola? It was all about the canned Coke. Then it turned into Sprite, and then they had orange soda. But then all of a sudden, Gatorade came along. So guess what they did? They made Powerade. Then once Powerade came along, people started drinking water. They made Dasani. People started drinking energy drinks. They went out and brought Monster. People started drinking juices. They went and brought vitamin water. They went and brought Tropicana. I think Pepsi brought that one, but you can see how they are. What you call it? It's the Investor Show. What's your name? Where you calling from? We got a little kid that's want to call in. So, well, that's it for the lines. But anyway, those are the things that people start to do, and those are things you got to think about as well. So so I would say renewable energy. But those are the big things that people do, and that they have as they call in, that they may have or whatnot. Those are my concerns. But anyway, I'm about to wrap this up here. For you guys who are logging in later, catch the playback. We spoke about the 10 kilos. We spoke about LEIs. We spoke about some individual stocks. We looked at some leading indicators. We went through a 10 kilo a little bit there with Nike. And look at that. Nike went right back up. We had all the debacle last week where I was getting so many phone calls and emails. Prince, should I buy Nike? Should I buy Nike? Man, I'm like, it only dropped 2%. One, two. This whole controversy with Colin Kaepernick, it'll probably be over. But Christmas time coming around, people forget about it. Very short-term memory these days. Because social media, the way we get news now, we got these phones, we got all this crap going on, man. Stuff is happening every day. Next week, it'll be some celebrity die or something happened with a company. It's so much going on and happening that we don't know what's going on, right? We don't know what's going on. We don't know what's happening or whatever the case may be. So don't get caught up in the emotional downturn. Look at it. I think Nike went down to $78 today. It went up to $80. Now it's back up to $82 or whatnot. So that's the way you may think of it. Investor Show, what's your name? Where you calling from? So, and that's it for the calls. I'm about to get out of here myself anyway. So somebody's sitting there calling to the line and and then waiting for me to answer and hang up. Oh my goodness. But anyway, I'm out of here. Thank you everybody for be on the lookout. He said, when will the next show be? We'll be on the lookout. You mean like my live, like me talking? Because I do Prince talk. Yeah, I don't know. So you try to open up the lines and but the lines are closed. But anyway, you have people, you got the Prince talk. This is my live. I try to do this every week. Sometimes I'm a little slow on it. Then outside of my Prince talk, I go off and I do a local show. Oh yeah, hit the like button for everybody that comes in and like the episodes. And I appreciate all you guys' support. Go out and check out my children's financial literacy book line called Wesley Learns. Me and my son. For people who are listening now, I know you guys are what you call it. I know you guys are very big supporters of mine. But go out and check out my children's financial literacy line. Wesley Learns to Invest. Wesley Learns about credit. Buy those for your children. I'm writing my third book next year. Some big surprises coming in on that. So I'm very happy about that. So writing that third book coming out. I'm working with some the local schools here to bring the Children's Investment Club to one of the schools. I think that'd be cool. Um, oh, you're watching from outside the United States. Where are you from, Stefan? Where, you're watching from outside the United States. Man, we global. But yes, those things are great. When you call, so check out the books, check out the podcast. Barbados, wow, all the way out in Barbados. Cool, cool, cool. Shout out to Barbados for tuning in tonight. But yeah, so my live shows I try to do once a week. Sometimes I maybe get on twice a week, so it's very sporadic. I don't have a set time on a live show. As you guys know, I do television. So the television, I do some cool interviews there. So they come out about once a week or once every other week. I do a show in Hawaii. So I do a show in Hawaii every other week. I do two shows, and I do every other week I do Hawaii. Every other week I do here locally in Denver. And then I come in and do live shows as well. And in between that, I give you guys tutorials and stuff like that. So, and then I share other videos too. So giving y'all guys that content, shaping ways you guys are investing. And I'm studying too, studying for accredited financial counselor. So wish me luck on that while I'm in school. And yeah, man, we're going to keep pushing it. We're going to keep it going, keep learning, becoming better. And, if you follow the show, you should be making some pretty good, I won't say pretty good money, but you should make some money. But anyway, I thank everybody for tuning in tonight. I thank everybody for the support across the globe. Well, you know what? Before we get out of here, chime in where you're from. Everybody tell your locations. Since we got Stefan saying the Barbados outside the United States, everybody else tell you where you tuning in from. Tell me, if you're in Georgia. Or we got New York. Okay, we got NY with Pat W. We got Barbados. Who else we got? Miami, Turkey. Okay, way down in Miami. Who else we got in here? Trucker. Won't keep saying Turkey. Goodness gracious, horrible. So, but anyway, I'm here live in Denver, Colorado. Oh yeah, I will be back in Georgia, my hometown of Waynesboro, Georgia, California, Brandon, California in the house, Miami in the house, Barbados, New York. Okay. I'll be back in my hometown of Waynesboro, Georgia, doing a book signing at the Burke County Library. Back in my hometown on October 6th, Saturday, October 6th at 10 a.m. I'll be there. Dallas is in the house. Okay. So, yeah. So I enjoyed it. I enjoyed my time. I'll be down in my hometown, a little small town of Waynesboro, Georgia. I'll be at the local library there. They have all my books into where my whole town's from. Tallahassee, Florida is in the house. Dallas is in the house. California, Miami, New York, Barbados. Okay. All right. I see you guys. So, but anyway, that's what I was able to do. I'll be back in my hometown, October 6th, Waynesboro, Georgia, Burke County Public Library. I'll be there from 10 a.m. to 12 a.m. I'll be signing some books. I'll be talking to people, meet and greet. I know that's a long way from Miami, California, Dallas, Tallahassee, and stuff like that. Going back to my small little town in Georgia where it all started. So I'm definitely looking forward to get back there and meet some, whoever was able to stop through. So I'm working on that, working on book number 3. That's supposed to be out next year, the Wesley Learn series. Working on doing a children's investment club. Have some other deals going on behind the table with some financial literacy stuff. We got some great shows coming up. The next episode that'll be uploaded from the show will be we have Mr. Stonewall Napier, the former senior vice president of Wells Fargo, wrote over $4 billion in loans, and he will be stopping by to talk about commercial loans and everything like that. Great interview. I think you guys enjoyed to hear his path of, him being at Wells Fargo for 13 years and all of the good stuff like that. And, talking about commercial loans. You guys who want to start businesses and how to get loans for your companies and businesses and stuff like that. My tongue to get a little shape up. But anyway, guys, thank you guys for tuning in for me tonight. You guys been cool and awesome. My name is Prince Dykes. This is the Prince of Investing. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace. Be safe. I'm out. Love you guys. Thank you. All right, now so I'll stop this thing.